Okay, so you want to start a side hustle. From the outside, it looks almost frictionless. A laptop open after dinner, orders arriving while you sleep, extra income beside your salary, and perhaps the freedom to stop asking one employer for permission to earn more. The appeal is reasonable. A side hustle can turn spare skills, unused equipment, or quiet evening hours into cash, experience, customers, and options. But the public version usually begins where the real work is already half finished. Before the first dollar becomes yours, there may be software, materials, advertising, platform fees, fuel, refunds, tax records, customer messages, and unpaid hours spent finding the work. A side hustle collecting $1,000 in a month might leave far less after $200 of operating costs, a tax reserve, and 40 hours that could have gone to rest, family, study, or overtime. That gap is visible in Federal Reserve data. 55% of people doing gig activities said the work gave them flexible hours, but only 35% said it gave them work-life balance. Still, the opportunity is real. Some people use a service to rebuild savings, eliminate debt, or develop repeat customers. Others discover they have purchased a second job, one with an enthusiastic manager, unfortunately played by themselves. So the question is not whether a side hustle can make money. It can. The real question is what separates extra revenue from genuine economic progress. To answer that, we must follow every dollar, hour, and risk from the first sale to the moment the hustle repays its starting cost. And that starting cost is wider than the receipt total. It includes money, certainly, but also attention, energy, reputation, and the small amount of unscheduled time left after ordinary life has taken its share. This is why the cheapest side hustle is not always the easiest one. A delivery app may require almost no marketing, yet every paid mile consumes fuel, maintenance, and vehicle value. A handmade product may begin at a kitchen table, but materials must be purchased before demand is known. A digital service can start with equipment you already own, although finding the first customer may take longer than completing the first job. The attraction survives because a side hustle can use resources that are currently producing nothing. An accountant can sell bookkeeping help on Saturday. A teacher can tutor online. A photographer can edit images after the main working day. The economic advantage comes from converting an existing skill into a second income stream without immediately paying for a shop, employees, or a full business infrastructure. In the Federal Reserve's 2024 survey, most people doing gig activities spent fewer than 5 hours a week on them. That suggests many side hustles are not miniature corporations. They are small, flexible experiments fitted around another source of income. But even an experiment needs an entry budget. Consider 3 simplified starting points. A service based on a skill and equipment you already possess might need only a domain, basic software, payment processing, and modest outreach. A product business may add inventory, packaging, shipping supplies, returns, and storage. A local physical service may require tools, insurance, transport, licenses, or safety equipment. These are planning categories, not universal price averages. The important point is that each new promise to the customer creates another obligation behind the scenes. Suppose you offer faster delivery. You may need more stock. More stock ties up cash. Tied up cash reduces your emergency reserve. A smaller reserve makes one refund or broken tool more disruptive. The original decision was sell more quickly. The final consequence is carry more financial risk before the sale occurs. That is how side hustle costs travel in chains rather than arriving as a neat list. Now consider Maya, a fictional composite. She works full-time as an operations coordinator and begins editing short promotional videos for local businesses. She already owns a capable laptop, so her simplified setup costs $420. A portfolio site, storage, software, sample footage, and a small outreach budget. She does not borrow the money. That matters because her first objective is not rapid growth. It is recovering the entry cost without creating a monthly debt payment. Her first customer pays $300 for one edited video. The headline number feels satisfying, but it is not her income yet. Payment processing removes about $9. Software and digital assets allocated to the project account for another $35. She spends 6 hours editing, 2 hours messaging the customer, 1 hour organizing files, and 1 hour making revisions. 10 hours of work leave $256 before tax, or $25.60 an hour. Then comes the deduction many new earners treat as a future problem. In the United States, net self-employment earnings can be subject to a 15.3% self-employment tax, covering Social Security and Medicare, and regular income tax may also apply, depending on the person's circumstances. Maya therefore moves 25% of her project margin into a separate tax account. That percentage is a cautious hypothetical planning assumption, not a universal tax rate. Her spendable amount falls to $192, or $19.20 for each hour worked. This calculation does not prove the job is weak. It reveals the engine that can make it stronger. Maya's first project required building templates, choosing fonts, creating an onboarding form, writing an agreement, and learning the client's brand. A second project for the same customer would reuse much of that work. If the fee remains similar while the labor falls from 10 hours to 7, her effective hourly return rises without increasing the public price. That is the real success mechanism: repeatability. A side hustle improves when 1 hour of unpaid preparation supports several future sales, when customers return without another expensive search, and when skill reduces the time required per unit of work. The first sale proves somebody will pay. The second begins testing whether the work can become efficient. The third reveals whether the demand is repeatable or merely polite encouragement from someone you know. Maya's early difficulty is not editing. It is acquiring customers without spending every evening sending messages that receive no reply. She adjusts by choosing one niche, independent restaurants, and offering a monthly package rather than isolated videos. One client agrees to 3 videos each month. The revenue is still modest, but the arrangement changes the economics. She can batch the work, reuse brand assets, plan a predictable schedule, and reduce the unpaid sales effort attached to each project. After several months, her side hustle has recovered the original $420 and rebuilt the money she placed into software and outreach. The visible success is the extra cash. The less visible value is a portfolio, customer references, negotiation practice, and proof that her skill has a market outside her employer. None of those benefits should be assigned an invented dollar value, but they may increase her future bargaining power, employment options, and confidence when evaluating other opportunities. People accept the temporary inconvenience because the payoff is not always immediate consumption. It may be debt falling faster, an emergency fund becoming less fragile, or a skill becoming commercially useful. There is also psychological value in knowing that one company is not the only doorway through which income can enter. That independence is limited while the side hustle remains small, but it can still change how a person approaches risk. If you enjoy seeing how ordinary income decisions work beneath the headline number, subscribe to Life Cost Decoder. The first payment may attract attention, but the system producing the next payment is usually more important. By this point, Maya appears to have solved the puzzle. She found demand, controlled her setup cost, improved her hourly return, and converted one-off work into a recurring package. Yet her success still depends on one variable that has not appeared on an invoice: whether she can keep producing this surplus consistently without exhausting the time and energy that make it possible. Consistency is the hidden variable, but it does not mean working every available night. It means producing a repeatable surplus at a workload that can survive ordinary life. Maya's side hustle is valuable only if customers return, payments arrive, the work remains efficient, and her full-time job, sleep, and health do not steadily deteriorate to finance it. This matters because variable income changes the meaning of an average month. Federal Reserve survey data show that 59% of self-employed adults reported month-to-month income variation. A $900 month followed by a $100 month is not a dependable $500 system. Fixed obligations do not politely average themselves. The strong version therefore measures the lowest sustainable month, not the most exciting one. Maya limits client work to 2 evenings and 1 Saturday block each week. She groups filming requests, uses one revision policy, collects a deposit, and schedules recurring clients before accepting isolated jobs. Each detail protects the economics. A revision limit prevents a 7-hour project becoming a 14-hour project. A deposit reduces cancellation damage. Batching removes repeated setup, exporting, messaging, and travel. Now her $900 monthly package revenue can be examined properly. Assume $110 goes to software, payment fees, storage, and project expenses. She reserves $198 for tax using the same simplified 25% planning rule applied to the $790 operating margin. That leaves about $592 in spendable monthly surplus. If the work requires 28 hours, the result is roughly $21 per hour after those allowances. It is not replacing her salary, but it is producing a measurable return. That return can compound without becoming a motivational fairy tale. Recurring clients reduce the hours spent searching. Better templates reduce production time. A stronger portfolio can support higher prices. The extra surplus can rebuild savings, purchase reliable equipment, or fund training that improves her main career. None is guaranteed, but each improvement can make the next dollar cheaper to produce. Compare Maya with Daniel, another fictional composite. Daniel earns $1,200 a month reselling products online, so his revenue looks stronger. Yet inventory costs $650, shipping and platform charges take $190, and returns average $80. Before tax, only $280 remains, while several $100s stay trapped in unsold stock. Maya collects less revenue but creates more available cash with fewer assets at risk. The smaller operation is economically stronger because margin and cash conversion matter more than the number displayed on the sales dashboard. A durable side hustle usually has controlled fixed costs, repeat customers, clear working boundaries, and enough cash to absorb a weak month. A fragile one depends on constant advertising, one large customer, borrowed equipment, perfect health, and every weekend remaining available. Both may report identical annual revenue. Only one can tolerate reality. In an optimistic but credible version of Maya's scenario, she keeps her $420 setup cost low, maintains approximately $592 of monthly spendable surplus, and holds a separate emergency reserve. She recovers the setup cost during the first month of stable packages. Over 12 months, the simplified surplus reaches about $7,100 before any later personal spending or reinvestment. After 3 years, even without assuming growth or investment returns, the cumulative total could exceed $21,000. It succeeds because demand repeats, workload stays bounded, and she does not expand her lifestyle around temporary income. A more ordinary version is slower. One restaurant pauses marketing. A laptop repair costs $600, and Maya reduces client work during a demanding month at her main job. Her average spendable surplus falls to $350. The original $420 setup cost is still recovered quickly, but rebuilding the repair expense and maintaining the reserve stretches progress across several months. It remains worthwhile, although the spreadsheet now resembles real life, uneven, interrupted, and less photogenic. The final calculation is therefore simple. True starting cost is the setup money plus unpaid preparation and any income sacrificed to create the business. Monthly improvement is the side hustle's after expense, after tax reserve surplus, minus what the person would otherwise have earned or saved with that time. Break-even is the starting cost divided by that genuine monthly improvement. For Maya, Using only the cash setup cost and a stable $592 surplus produces a break-even period of less than 1 month. Once the value of her time is included, the economic break-even takes longer. That is not a flaw in the calculation. It is the calculation becoming honest. Only after seeing how the strong version works do the two largest mistakes become clear. The first is comparing revenue with wages. An employee hearing $30 an hour normally thinks of compensation for an hour already organized by an employer. A side hustle owner must also price sales calls, revisions, bookkeeping, equipment, cancellations, and empty hours between customers. A headline rate can exceed the day job wage while the effective rate falls below it. The second mistake is treating the best month as permanent. A person sees 3 strong payments, upgrades the car, adds subscriptions, or reduces main job hours. Then demand returns to normal. The income was variable, but the new expenses are fixed. Growth has not failed. It has been spent before proving it can continue. The difficult version combines both errors. Maya leaves her job after 2 large clients arrive, spends most of her reserve on equipment, and then loses 1 client while the other delays payment. The recurring surplus that protected the original side hustle disappears at the same moment her salary does. The problem was not video editing. It was allowing 1 customer and 1 strong quarter to carry obligations designed for stable income. So, starting a side hustle creates genuine economic value when existing skills can produce repeat sales, healthy margins, controlled costs, and sustainable work hours. It becomes weak when unpaid labor expands, income concentration rises, or lifestyle costs grow faster than dependable surplus. The people best positioned to benefit are not necessarily those with the boldest idea. They are those who can test demand cheaply, protect their main income, preserve a reserve, and continue long enough for efficiency and reputation to develop. Return to that laptop open after dinner. It may be the beginning of a business, a useful financial buffer, or simply an expensive way to stay busy. The screen looks identical in all 3 cases. What changes the outcome is the system operating behind it. A side hustle becomes valuable not when it earns its first dollar, but when it can keep enough of that dollar without consuming the life built around it. Would you start one after calculating the real hourly return? Share the first cost you would measure, and subscribe to Life Cost Decoder for the hidden economics behind everyday adult decisions.